Anna Nichols, Director of Communications at Altair Advisors. And with me today to discuss Altair's quarterly market views is our Chief Investment Officer, Jason Laurie. Welcome, Jason.
Thanks, Anna. Glad to be here.
The stock market ups and downs have really dominated financial headlines so far this year. How unusual is this increased volatility?
Well, Anna, you're right. The U.S. stock market has moved up or down by at least 1% on 30 days so far this year. And to put that into context, last year we only had 8 days of 1% moves. However, if you look at the average year, we usually have about 50 days. So, and to some extent, the current volatility that we're experiencing this year is more normal than not. However, interestingly enough, if you look at the S&P 500, even though we've had a lot of volatility, in the end, it's relatively flat for the year.
One of the reasons for the volatility are fears of a global trade war. How concerned should investors be?
Well, certainly trade tensions are a near-term hangover for markets, but we believe a full-blown trade war is unlikely. Neither China nor the U.S. wants to jeopardize economic growth to try to win a trade war. Ongoing negotiations suggest to us that there will be more moderate, reasonable solutions in the end.
There's been a lot of attention paid to interest rates on U.S. government 10-year bonds touching 3% for the first time in 4 years. Do we expect this to keep trending higher?
Incrementally higher rates are a natural consequence of a more healthy economy. However, we don't believe that rates will move substantially higher from here. That would take significantly higher growth, more inflation that would normally be associated with an overheating economy. And the data today simply does not suggest that.
We've talked about the two main sources of volatility, a possible trade war, higher interest rates. What are we seeing on the positive side?
As expected, corporate earnings this quarter are very strong. U.S. companies are reporting their best quarterly profits in more than 7 years, up over 20% from a year ago. We also believe that fiscal stimulus is still a big positive. By that I mean the benefits of tax cuts, deregulation, and the repatriation of companies' foreign earnings back to the U.S. That is bringing cash that's outside the U.S. back into the U.S.
Thank you, Jason, for being with us here today.
Thanks for having me.
And thank you for joining us. To read our full market commentary, please visit our website.